Good afternoon, everyone, and welcome to the April edition of the BizVal webinar. It's part 2 in our series of How to Value a Startup. I'm Graham Stephen, the co-founder and CEO of BizVal, and today I'm joined by my co-founder, the Finance Ghost, and we're delighted today to be joined by a very special guest, Stefanie Unger, who I'll introduce shortly. So the usual housekeeping for today is the chat section is set to private, so only the presenters and moderators can see your messages. But please feel free to add any questions as we go along. If there's any comments that you have, please put it in the chat section. We'll pick these up either as we're chatting or when we get to the Q&A section. We are recording the webinar and it will be made available on YouTube in case something comes up and you need to drop off the call. Please check the handout section of the webinar and you can download our latest newsletter, which will contain links to our previous article, the previous webinar. It's all contained in the newsletter, so please check that out. As you know, we run a poll, and last week our poll, or the last webinar, our poll was on, how will you define a startup? And interestingly enough, the overwhelming answer was age of business, which is quite interesting because I think we hold the view that it's less to do with the age of business, but more around the sort of level of experimentation and the level of innovation that's happening within a business and mindset more than age. So that was a result of the last poll. This week's poll, a very simple question. If you're on the webinar, are you a founder or a funder? And the options are I'm a founder, I'm a funder, I'm both, or I'm neither. And then finally, if you've missed any of our previous webinars, these are available both on our website and our YouTube channel. So please go and check those out. So today we're going to be talking about emerging trends within the global startup ecosystem. And I'm delighted to formally introduce Stefanie. So you're going to have to bear with me because this is quite an impressive CV. And I do want to give her the platform I think that she deserves. But Stefanie is based in Berlin. She's an multiple award-winning author who's written 5 different books. She's a disruptor, connector, influencer, and I think importantly, she's got a passion for making the world a better place. She's currently the managing director of the agency Berlin, GmbH, which are based in Berlin and New York, and she advises companies in equipping them for the future. She's involved in funding, recruiting, business development, and identifying, acquisition targets, and serves on various advisory boards. In addition, she heads up the business development arm for Systematic Ventures, who's a data-led startup matching funders and founders. So a bit about her background. After studying in the USA, I'm not going to give any, she might choose to share this, but not give any names away, but she was in management consulting. And that led her to publishing her first book on values and leadership. And that was shortly after the collapse of Enron. So I'll leave the rest to your judgment and imagination. She's recently finished her 5th book, and it's called Future Proof: How to Secure Your Company a Space in Tomorrow's World. She's a board member of the nonprofit Justice Mission in Germany, fighting against forced prostitution and slavery. And she's on the ethics board of investigative journalism organization Corrective IV. She also serves on the jury of the Green Tech Festival. So, with that impressive CV in a background like that, we're really honored to have Stefanie join us with today. So welcome, Stefanie. I hope my introduction at least does a bit of justice and adds a bit of flavor to your background. But, would you mind just taking a second just to greet our listeners and kind of share why you're excited to be joining us today?
Yeah, thanks for the kind intro, Graham. It's a total pleasure to be on this call. And actually, I this year, it was the first time that I was in Cape Town, and so thrilled and excited to venture kind of a new place, and also found that there was a great vibe around the startup community. And so I'm glad we met back then. And I'm basically, you kind of did the whole, covered everything that's important. So I never thought of being an author. So it was more of the curiosity to learn. I had, was confronted with the situation that we, as Arthur Andersen, audited Enron, and we ended up being taken down, or we were indicted, and I was live in the meeting where we found out we lost the auditing license. So it was like the situation back then led me to write and look into leadership, into influence, and all those factors. And so the last book, I realized that most of the CEOs and companies I was in contact with or advising, their biggest challenge was how to prepare for the future. And so I was thinking, why not write an advisory book for the future? And wanted to come up with 5 to 10 theses. And when I was done with the book, I went into the market and looked at what's new in terms of technology, in terms of entrepreneurs, ideas, and wanted to bring those to the corporates to be future-proof, basically. And realized on the way that a lot of the cool ideas are not even going to survive or make it if they don't have the support. So I kind of decided to switch sides. And as you mentioned, so that's what I'm passionate about now, is like finding ideas, entrepreneurs, technologies that really disrupt things and make the world a better place in some ways. So my one common denominator is that I look for impact. And it's, from different stages, very early pre-revenue to Series E. It is from, the bioscience industry to, like a robotics company. It's very different ideas that I look at, and I help them in getting funding. So I bring together, the potential either VCs, private equity, or angel investors, and I open doors through business development, and yeah, as you mentioned, and then some recruiting and M&A.
Fantastic. Well, listen, I think I'm sure there's going to be hundreds of questions for you today. So without further ado, I'm going to hand over to Ghost, who's going to kind of lead with the first question. I think, the intention today is we've got a bunch of themes that, we're going to chat to you about, but, to the audience, please, anything startup related, funding related, valuation in startup related, please feel free just to send those questions through. And the idea is that we keep it flowing, we keep it a conversation rather than a presentation. And Ghost, I'll hand it over to you.
Yeah, thanks, Graham. Thanks, everyone, for joining us today. And Stefanie, especially to you. We can all see how busy you are. I think everything you're doing really speaks for itself there. And I really am glad we met that day for a drink in Cape Town. So we were introduced via a mutual contact, a friend of mine who actually did a deal for his business. It's a well-known South African consumer product, but I won't give the name away, with German investors. And I think via he came to meet you. And I remember he messaged me that day and said, listen, Stefanie's in town. You've got to make a plan, no matter how busy you are. Go and have a glass of wine or whatever else with her. She's in Cape Town. And yeah, just really, really glad that we did that, because I think that conversation really made it obvious that there's just so much for us to talk about, and so many similarities between the South African startup scene and what you've seen in places like Berlin and London, but also a lot of differences. And it's going to be great to tap into that today. I think before we get into some of the more geographical stuff and start taking questions from the audience, the place we wanted to start was to just say that our valuation approach at BizVal, specifically on startups, but on everything really, is very much grounded in fundamentals. So we call it a mix of optimism and realism. And with what you've seen in the startup ecosystem in the past couple of years, do you think that is the right approach, especially with what's happened, after the pandemic, interest rates going up? Is there just more realism in general around what startups are actually worth?
So this was towards me.
Yes, that one's for you.
Okay. I missed that one. Honestly, I think that actually, we've seen in the past years a big change in the whole industry, and I feel like there's almost there's a total shift and readjustment of the market. It almost reminds me of the .com era, where that everybody kind of got money and they had burn rates of hundreds of millions, and they still got so much funding, and it was not real. I mean, a lot of these business models, they didn't even have a perspective of when they can make money. They had a lot of leads maybe in the database, or had a cool idea, but it wasn't like there was a business model that was working like that, or even a perspective. So I think that it's an adjustment that we're seeing now that's actually very healthy for the market in some ways. The only challenge of that is that a lot of VCs now are waiting, they're looking at things, they're not making any decisions. So that makes it a little bit more difficult. But I think in terms of valuating and approaching investment projects, I think it is actually good that one now looks at different aspects and doesn't just make money, kind of throw money around for free, which kind of distorts the market, right?
Yeah, I think that's very much a function of low versus high interest rates, right? In the pandemic period, money was super cheap, and that means you could really take a risk. You didn't necessarily need to understand exactly what the entrepreneur was going to do. And that's where we saw trends around other stuff like, oh, this person went to the correct Ivy League school and lives in the right neighborhood in San Francisco, and I happen to know his or her parents. And so let's throw some money at this person and hope that they figure it out. And obviously there are success stories from that. I mean, if you throw enough darts, one of them is going to be a bullseye, right? But people don't talk about all of the darts that fell off the board. And again, in venture capital land, with the way they think about the returns they need to get and the failure rates, once again, when interest rates are low, it's not the end of the world if half the portfolio fails. It's the end of the world for those founders, but it's not the end of the world for the venture capitalists because they still come out with good returns. Unfortunately, fast forward to 2024, and we've seen higher interest rates across the world. And that really does impact startup valuations. It doesn't mean that you can't still go and actually build something that needs to, take a while to get to market and has big dreams and everything else. Of course you can. But I think you just have to get a lot tighter on actually showing people how this thing is going to make money and, what that cash flow journey actually looks like. I don't think it's good enough anymore to be able to just point to some cool blocks on a whiteboard and explain that you're going to build the Uber of fill in the blank. And I think we've seen that a lot in our conversations with founders, Stefanie. I imagine you've seen some of that pressure coming through on them as it gets harder and harder to raise.
Yeah, I see that, but also coming to the valuations, I think that there's, in the past, it's always been like companies, said, or the startups said, oh, it's worth like this much. And for the ones that didn't have a track record, which a lot of them are early on, or that have, there's companies like a Volocopter that they're super they're super asset oriented, so they have to raise a tons of money. They're pre-revenue. There's no experience with, success or anything like that. And how do they evaluate these companies, right? And there's not really been any logical or how would you say, like there's not really been a method that I could say you look at it and there's criteria and everybody understands. So it was kind of like thumbs up, thumbs down, maybe it's worth this much. And I think that is part of the problem, because you have to have certain criteria that can tell you what the value is and what the potential is. And so I think that is going to play a major role going forward as well, to have a better qualified valuation.
So Stefanie, I mean, we touched a bit on the valuation piece, but you've had the benefit, I guess, of operating on both sides of the pond, both in Europe and in the US. And when you read in the press and that it seems as though the US startup ecosystem, Silicon Valley in particular, gets far more airtime and certainly more money than a lot of other countries. So Europe, for example, there's a VC culture there, but not anything like the States. But there are quite a lot of supportive systems. You look at South Africa, there's like a fledgling VC culture over here. And emerging markets really struggle to get the sort of support that they need for startups. What do you think that sort of European and non-US, founders in particular can kind of better do to close the gap between the US? What are some of the differences between, let's say, the US and the non-US startup ecosystem, and how do founders think about the world differently across the oceanic divide, so to speak?
Yeah, I think there's two parts of the challenge or the problem. Obviously, one coming from the founder side, but then also the funder side. And later one I would think is a bigger problem. But in terms of the founders, I think in Germany or in Europe, at least, I see that what motivates founders to start a company, or how do they get to that, It's usually either they have a problem and they want to solve it and develop something to solve that problem, or they want to do something good. They want to impact the world in some ways. And it's not necessarily like a money-driven approach, either of those two. And then I'm thinking the ones that really want to like make something big, they end up moving to the US because they see that most of the money is there. So in the US, you have different motivations, and it's usually either if you want to be successful, and it's I think a lot more common to want to make money and be big. Like here, it's almost always something that is seen as a little bit critical, like capitalism is bad or something like that. So it's not as driven as in the US. I think the mindset to be successful and to make it is already a lot more common and welcomed. But then the individuals say, hey, either I make my career within the company, or I do a startup that I become big with. But that they are motivated by, I'm going to work day and night because I'm going to do something really big. I'm going to be the next Amazon or Apple or whatever. It's like they are thinking kind of more of the all or nothing, and they want to put all in. And when you see like the startups that are in the valley, obviously also it's a matter of network, that everybody's there, and the investors are there, and so forth. But I think that Americans startups, I mean, they're already trained in high school or in probably elementary school to sell Girl Scout cookies. So they also are, they're trained very early on how to sell, and they pitch, and that's like part of the DNA at some point, right? And then the other thing is, I think Americans set a lot higher goals. Like they believe in the North Star out there. Like JFK had the goal to fly to the moon, and it was probably really crazy to think that, and it wasn't going to happen during his term. But by setting higher goals that almost seem crazy and achievable, you achieve so much more. So I think there's a combination of motivation, ambition, then confidence in terms of how to sell things. Like in Germany, most people are more modest, and investors, they hear 4 pitches and they want to invest in who believes the most in themselves, right? And they don't look at what country do they come from. So I think that's definitely a big matter. And then the other issue is with money. There's way not as much risk capital in Germany or in Europe as in the US. And I mean, it's a lot of times really even the German or European founders that end up going over to the US and doing their startup there to get more funding. And actually, I'm seeing that the valuations in the US are a lot higher. So they get more money, then they can grow faster. So it's also kind of like a spiral, right? And I'm thinking in terms of like when I have contacts with people from the US, a lot of times they still think that Europe isn't as important, so they focus more, like they think they're the market, which I mean, right now a lot more is coming from there, but I think that we will also see a shift, and we will have more startups come from this side of the continent.
Yeah, I think you touched on an important point there. It was just the size of the vision is important. And I think what you're saying there is that non-US startup founders need to think bigger, think beyond the borders. In South Africa, that's a particular challenge, I guess. Is if you look at South Africa, it's still a relatively small market. So, for VC investment, you need to be able to justify being able to grow big enough. And I think the South African businesses that have successfully been able to do that and raise big chunks of capital have been able to convince investors that they have a plan beyond the borders of South Africa usually, and I think probably the same applies in Europe. It's not just about growing a business in Germany. It's about taking over continental Europe or whatever the case might be. It's a much bigger plan that's needed. Stefanie, maybe just a follow-on question from that. You also talk about the funders, and when you talk about the US, you tend to think of VC, you think the Sequoias, you think that of the world. And but this funding ecosystem is constantly changing when it comes to startups. Can you just share some thoughts on how, non-angels and VCs are getting involved in the space? For example, family offices, what's happening with regards to, government-sponsored programs and grants, technology offices, all those sorts of things. I mean, do you have a view on sort of how that sort of startup funding ecosystem has changed and evolved over the last few years?
Well, I think, as we've seen very successful exits and things happen. I think there's more willingness to go in that area. Actually, they're not going to see the same returns if they just invest very conservatively, right? But I also think that there is a big need of, especially for family offices and investors as such, to have a way to evaluate what they're investing in and have more background and data. Like, companies aren't public; it's not as easy to find information, right? And a lot of these people don't have that background, so they don't feel as comfortable investing in the market where they feel like they don't have that experience with. So there need to be other measurements to show, what the value is, how this company can grow. And I'm thinking that as that improves, because we have long history now of things we can look at, that there will also be more activity from that side.
And what are some of those metrics? You touch on that. Obviously, on the one hand, it's like, it's evolving from this 10x return being the single criteria, and particularly when you talk about sustainability and, how should I say, impact investing. So what are some of those other metrics that you are seeing investors and founders looking at, and what does that mean? For funders looking at, and what does this mean for founders in terms of, how they need to think about pitching and positioning their businesses?
I mean, I think nowadays they really need to think of the business model working without, just a psychological, idea that it's great. And there has to be a foundation that the investors can look at and that makes sense. I think that, there's a couple of other criteria, but obviously if you've already had exits, that's great because you have a success, history, and even better if you have the same team, because a lot of times that's the reason that they fail. And I think that it shouldn't be, a product that's already out there 100 times. So trying to think of something that either solves a problem or has an idea that is big, that is scalable. And that is, I think, the big thing, the scalability that you look at, that they have to have.
Sure. Ghost, do you want to jump in?
Yeah, Graham, I actually want to pick out this great comment that we've received in the chat. So there's a question here that just talks to just funding options for startups. I mean, that's obviously the number one thing on the minds of founders all the time. And of course, it's hard enough to raise equity, but it's almost impossible to raise debt. It really, really is difficult, especially for a sort of a genuine startup that's still proving out the business model, etc. And there are a lot of reasons for this. I mean, one of them certainly is that most startups these days are relatively asset light businesses. They're often building out a technology. They're not trying to borrow money to go and buy factory machinery and start producing widgets like my old accounting exams used to assume that everyone used to do. I'm sure the accounting exams today don't talk about widgets so much as building platforms. I wouldn't know. But that is one of the challenges, definitely. And of course, the other challenge is just serviceability of debt and cash flow. You've got to find a debt provider who's willing to wait probably 3 or 4 years until you start servicing that debt. Now, the cruel irony of all this, and we see it obviously when we value startups and we're trying to look at what would an equity investor pay, what sort of return do they need to get those 10x returns, and inevitably they will get a return per year if it works out of like 55 to 60%. You have to believe that there's space for a debt provider of some kind to come in and say, well, actually, we'll structure this in such a way that our returns from the startup are 25 to 30%. So somewhere above unsecured debt for individuals. I guess it's just interesting to think about what could that look like. And the question is, in the global market, do you see any kind of debt availability for startups, or is it very much the same overseas where you can pretty much only get your hands on equity, you can't really raise debt, and so you're stuck trying to get a venture capitalist rather than having a conversation with a debt provider?
The interesting thing is that I'm seeing that in the US, the debt financing is very common, and so many startups do it, and they all say, why would I give away shares if I can, like make my company grow and just get debt financing? The thing is, between Europe and the US, interest rates, it's almost double over there. So when we're looking at debt financing, the amounts, and I believe that the rates are quite high in South Africa as well, but in the US it's like 14% or something like that, where that's for German startups unbelievable. Like 6-7% could be something that they look at. But also, so I'm seeing that also coming to Europe or to Germany. I think it's a matter of mindset as well, that Germans are always more conservative and they'd rather not have the risk of owing money, not being able to pay it. So again, that opportunity vision thinking, right? But also, because you mentioned that the asset part, it's interesting because in the US, I recently learned that you can also do patent, like you can do that, like financing on patents rather than assets, which is also interesting.
Yeah, that's fantastic. Sorry, Graham. I was going to say it's so typical that, of course, the US has got this. I mean, where else, right? And the differences in interest rates, that's a really important point. I mean, in South Africa, 14%, people are happy if they get that on their car finance. Never mind on a startup loan. But obviously, we are in a higher interest rate environment, and that makes debt even more expensive here. But of course, what founders don't always see is the equity you raise is also really, really expensive, right? You've given away shares. That person, if it works out, is going to get a return far in excess of that debt rate. But the difference is you don't have to service the cash flows on equity. If it happens one day, it happens. If it doesn't, it doesn't. And the other difference, of course, is you don't have to give security, whereas the bank is going to ask you to sign away your house. So I guess it goes back to that point you make about, how much risk tolerance do you have? In the US, it's big risk tolerance. It's big rolling the dice. That's why their economy looks the way it looks. And I think a lot of other places in the world are that much more conservative.
Spot on. And I mean, there's another question that's coming through, and maybe we can dive into this. As I said, we'll keep it organic. But there's a question from Tim, and this is talking more about the founders. Nice. What are the desirable and undesirable founder traits that encourage or put off potential buyers and investors? So I think this is talking beyond the business model and the numbers and the valuation. But I mean, what are you seeing, Stefanie, in terms of what makes somebody investable? We always talk about back the jockey, but what are some of those elements that make somebody attractive to invest in or not?
Yeah, I mean, it really is a combination. I think it's not just looking at the individual, but obviously, are they hungry for success? Are they hungry for growth? What's their track record, and if they've failed before, that's also great, because then they, I'm sure, learned from that and can apply that. But that's a matter of culture. Some countries welcome that, some don't. But I'm seeing that one of the most important ones is, I think it's called grit. Like, if you have the ability to get up again, you fall 10 times, you still get up, and you just have that endurance. And I think that can be seen from your background, your CV, and so it's if you're looking at the person, I think it's some personality traits that that you would look for, that have a more likelihood to exit, or to have become a unicorn, or yeah.
And some of the red flags, I mean, so what are some of the things that work the other way around? You have a conversation with a founder and you run a mile.
Interesting, because I had an investor that I introduced a startup founder to, and then he said, well, she's asking for so little money. It sounds like she just wants to have a job and not work much, right? And so sometimes, I mean, that is also probably part of female attribute or something that we don't have the guts to ask for more and ask for more money. But I think that the red flags should be, if they're not really ambitious, and they're not, maybe, they don't have that entrepreneurial mindset. Maybe they are very security oriented. But I think really this excitement and this, it's really hard as a founder, right? You have so many challenges, and you have so many times where you might be just gone and you don't know if you're going to make it. And then you have to raise money again, and there's all these things. So you totally have to believe in your idea, in what you're doing. And if you don't have that personality, it's probably going to be quite difficult.
Yeah, you touched on something there as well, and I'll, around female founders often not asking for enough, and I know this is always can be a sensitive topic, but the VC space historically has been a very male-dominated space. And to what extent has the startup ecosystem evolved over the last few years to better support female founders and funders, on both sides of the equation, and what more needs to be done in this space? I think I'm sure you've got a very strong view on that.
Yeah, so I think the funders part is the most important one, and the other one can easily follow then the other way around. But I've seen, at least we have in Germany, in Berlin, we have a few female funds, and it's crazy because I was at an event recently where they invited everybody, and the first time they had that event, the lady running it said, there were 7 people. One was an investor. The other 2 wanted free wine. And then there was 2 founders. And that was kind of the group. And when I was there now, the room was packed. There was like 80 women, and there were 8 of them pitched for a new fund that they're starting. So you're really seeing this market take off. And in regards to the female side of things, like there's a lot happening. But still, we're way far from being equal in that sense. And there's still, even though these might be 80 women, even if, there's 10 female funds, there's like so many more male-driven funds, and that still have in the pitching probably prejudice in some ways. And it's not going to change until you have that kind of evened out. So the venture capital favors male founders. It's like 7.7% of female teams are backed by business angels, compared to 25.7 from male.
Sure.
And only 1.6 of female teams use venture capital, compared to 17.6 of male. And so I think that there's still a big, a huge difference. And in 2020, there was, from 100 startup founders, there were only 11 female. So you can see, like, it's like a 10%. The market is still, very far from having equal opportunities in that area. And I definitely think that we need to focus on supporting female founders by making it visible when they are, because there are some amazing female founders. So we have to, make sure others see it and are encouraged by that. I think there also should be more mentorships, because if, females have gone through it, they could help others, and exactly with the things that they've been experiencing to kind of get through that.
Stefanie, oh, sorry. I really wanted to touch on a point you raised there, which was to say, the percentage of VC-backed female founders versus male founders, and how you're seeing more female founders come through. And it'll be interesting to see, as more female founders come through, will that percentage increase because of that impact of relationships and introductions? You've kind of touched on it a couple of times. That's why I didn't want to let that point die, which is, to what extent are VC raises really the result of introductions? So if it's historically a bit of an old boys club, you can understand then how those stats look the way they look, because, they hang out together, they go and make these introductions, and it makes it harder to break through. Do you see a flywheel effect then, as more female founders actually come through the system, more introductions, more kind of raises? Because it's a very different world to going to the bank and applying for a loan. Anyone can walk into the bank, anyone can see the bank, it's there, and they advertise. I think a lot of VC deals happen behind closed doors, very relationship driven. Is that a reasonable assertion, basically, that that's probably part of what's happening there? And are many deals just basically the result of an introduction?
I mean, I definitely think that that is part of it, especially in the US. It could be Ivy League schools, it could be networks, clubs. A lot of it is still who do you know, and yeah, that's a huge part of it. But I'm seeing in Europe or in Germany, I'm seeing that there's a lot of female investors and founders coming together. That community is growing, and they're now doing the same thing. They're supporting each other, kind of on that route. So one, I think that network needs to be further developed. There needs to be more money in that network of female founders, then they can change things. And then there have to be other criteria. I don't know if we can see that over the next years and say, hey, investments that would be an interesting analysis, investments that have been done through relationships and connections, are they less successful than the ones that have gone through a certain criteria and measured? So I don't know. I'm thinking that long term that will be the case, but we have to work on all sides of things, right?
Yeah, I mean,
absolutely.
I think you touch on a point there, and I guess it was a question. Is like, what are we seeing in that space? Not necessarily particularly in terms of supporting female founders, but the whole ecosystem supporting startups, and how that's evolving and how that's changing over the last few years. So what are you seeing in terms of the role that incubators and accelerators are playing, the importance of community and developing startup communities? How have you seen that evolve over the last few years, and has it changed sort of post-COVID? I mean, I guess we're quite away from that now, but I mean, what are some of the recent developments in that space?
Yeah, that's a great point. I mean, it's huge, I think, and it makes such a big difference if you have the right community, the right surrounding to be successful in what you do. So I'm seeing more and more communities, not just co-working spaces, because that's a place you can work, you can go to WeWork, but it's actually a place where you have the support from the ecosystem. So I, help startups with funding, recruiting, those things. And there is places where they provide that as well. And there's that network, and you interact, you talk, and then something like, it's just very, I think building community is one of the most important parts of this. And I'm seeing even like one in like a fund, a VC fund, that has started to build a space with a gym, a swimming pool, a concert, a coffee, everything, kind of like that space you can work at. Exactly for that reason. Like, it's not their business really to do that, but they're realizing we need to create a space where people like to come, where people can interact, where there's knowledge sharing. And also, we have a new project in Berlin that a guy that started the first co-working space for startups when nobody even had that on the radar. He bought a huge building, and he wants to build the new valley, like a world in Berlin, right? He's bringing in money, he's investing himself, and he's creating like huge campus, and with art and music. And so I think that you have to have, first of all, in a city or space, you have to have that ability to find an apartment, to get integrated into a culture. If it's like not international, it might be really hard to get in. Like, you have to make your city and your space, I think, attractive for founders to come into it, make it easy. And then you have to have that community that supports them in the development of their company.
Yeah, I think it's the creative juices is bringing different people together, and that, I think we often underestimate that, right? It's almost seen as kind of a nice to have, but it's actually essential. And that, I guess, has been part of the success of Silicon Valley in the past, is that it's more than the valley. It's the whole ecosystem and the community and the language that people speak in terms of startup language, and how do we recreate that in other parts of the world, I think is absolutely critical.
I would be interested in how when that market really started developing in South Africa, and when it kind of took off, like the startup community in general.
Ghost, I'm going to hand that one to you.
It's hard to say. I mean, look, obviously lower interest rates helped everyone, but I think it was there even. It's funny. I actually have this great memory where a wealth manager that I know, actually, before I started the Finance Ghost, I was still working in corporate, and he actually took me along to a startup awards evening at Workshop 17 at the waterfront, and this must have been like, I don't know, 2019, I would wager. And I remember sitting there and thinking, these people just look like they are doing what they were born to do. Look, I've gotten a little bit more cynical about some of the stuff in the past few years, to be fair, but on the whole, I think it's true. Those people are building what they want to be building in the time they want to be building it. And I do remember sitting there and thinking, this is cool. Like this looks like living, as opposed to what I'm currently doing in corporate, which is existing, which is not the same thing. And then I started to really get serious about, okay, what does my escape plan actually look like? I mean, I had a spreadsheet called escape plan, hilariously. And I think that talks to the point around just community. And the more of this stuff there is, the more people will be inspired to try and seek out, different ways to actually live their lives. You don't have to be chained to a desk in a corporate if you don't want to be. If you do want to be, that's not an issue. Because believe me, the entrepreneurial route is really hard, not for everyone, and will have other impacts on your life. But if you hate being in corporate, then you need to try and immerse yourself around other entrepreneurs and hear their stories and their upside and downside and decide if that's the life that you actually want. And to be honest, I think that community piece actually extends into the sort of funders that you speak to, because I think what's come through for me clearly in this webinar and some of the conversations we've had is you've got to match yourself to the right type of investor. So if you're going to try and raise from a US-based investor with a big hat and a big personality and an even bigger checkbook, you can't go there and ask him for 200,000 Rand because you want to, go and, I don't know, buy a coffee machine and do some Google ads. You're literally not worth this person's time on the phone. So you've got to recognize, what do you actually need? And don't just get excited about raising money for the sake of it. Like, what do you actually need? It's not always right to go and raise as much as possible. I think it depends on what you're building and why. And it comes back to that point of how important it's become in this higher interest rate environment to actually really understand your business model. Where do you need to actually plug the funding gap? What sort of free cash flows are you going to generate as a business? And what does that mean in terms of when and how you raise funding? Because then you can start to figure out who is the right type of funder. And if what you're building has an impact angle to it, you would be very foolish not to speak to impact funds, because they are going to look at the impact side, not just the financial side. And you could come out with a way better outcome than if you are going to go and try and tell a feel-good story to someone who actually doesn't care. It's just logical. So I think that's one of the key takeouts for me today, at least.
Sorry.
Go for it, Stefanie. Yeah, you go.
I'm wondering what role the scaling part plays in, like, what are you seeing in South Africa in terms of scaling potential, and what effect does that have on valuations?
So I'm happy. Graham, you want to take it? You take it.
I mean, I just want to add a comment to the previous question in terms of where this whole sort of South Africa startup sense. I think that kind of, probably in the last sort of 10 years, we've seen a big shift towards kind of the startup ecosystem evolving and developing a little bit more. Some of the incubators, the likes of Techstars, Startup Bootcamp, also a lot of the universities, have established technology transfer funds. University of Stellenbosch, for instance, has also got their incubators that they run. So I think in South Africa, it's seen as a need, and it's developing. And I think, over the last sort of 10 years, we're seeing an emergence of that. And again, post-COVID kind of like slowed some of that stuff down. But I think post that, again, those things are kind of picking up again. I guess to your question around scale, and I think the most important thing here is having a global mindset. And it talks to the point you were making earlier. If you're thinking, I want my startup so I can start a cool lifestyle business that serves people in Cape Town or Johannesburg or Durban, you're not going to get very far. So I think you have to think about it. Is it a universal need that you're solving? Obviously, a country like South Africa has got a big population and a ton of needs there. And in that instance, it's very much, can you service the local population? But it's got to be a low-cost model. There's not a lot of disposable income. So there's definitely room for innovation. And I've seen this certainly in the sort of African ecosystem. But those models, by virtue, have to focus on unit economics. Because there isn't this mass amount of disposable income that's needed to make them work. So I don't think there's a universal answer to scale. I think, are businesses scalable within South Africa? Absolutely. Are they scalable north of our borders into other parts of sub-Saharan and Northern Africa? Absolutely. But got to be solving a real need at a low cost and still have unit economics available. Or have you got technology which is transportable to other parts of the world? And I think that's really the kinds of businesses that have actually attracted VC money in South Africa, where the innovation has come through doing things smartly and efficiently, because in these kind of countries you have to focus on unit economics. And then the question is, how do you scale that externally, which is not easy, right? I mean, as a business, as Bizwell, that's a challenge we're facing as well. Taking a product that works here to the UK or the US, it's not just plug and play, right? And those are some of the things to think about.
You're experiencing that yourself. I mean, looking at the US market as well, or Asian market, or is it more focusing on Europe then?
Yeah, I think for us, it's kind of step by step, right? It's looking at English-speaking markets because that's what we know. But I think for us, we're solving a universal problem. But ultimately, how you take that and you scale that is interesting. For us, it's this combination of, we develop the technology that enables it, but ultimately it comes down to people and having the right partners on the ground in different countries. So that's how we're thinking about it. But I think, just looking at the time, I think we probably need to wrap things up. I think there's been some great questions that have come through that hopefully we've addressed. Maybe we can just wrap it up, Ghost, with a closing thought from you, and then I'll leave it to you, Stefanie, just to kind of leave a closing thought as to listeners on the call. What's one or two things you'd like them to take out of today's discussion, and we can wrap up.
Great.
Thanks, Graham. Yeah, the one thing I do want to just leave people with is that concept of scale, and just think about what your business is and where it's going to resonate, and also your reaching of markets. And the perfect example for South Africa is Capitec. Capitec has built an absolute behemoth right here in South Africa because they understood that there was a big economic profit pool in banking. There was a way to do it differently, and then they executed to the highest standards. Admittedly, they had the funding support. They were incubated within PSG, and they've built an absolute rocket ship. I mean, just go and look at that share price performance. It's been the best performing share price on the JSE. I think the headline I saw today was in democratic South Africa, which I can believe. If you go and chart it long term over the last, since it's been around, basically, you're going to see that come through. So the point I wanted to leave everyone with is just, you also can't go and tell a scale internationally story in a business model that can't scale internationally, because you're going to get found out very quickly. And that business model will get unpicked really, really quickly by any VC who knows anything about business, or you're just going to try and push it and find that it's really difficult. Maybe the business you're building actually has a much better chance of winning big market share in your home market, and it's better to spend your time thinking about how you do that. There are plenty of very wealthy, homegrown entrepreneurs who have never made a cent outside of South Africa. So there's no silver bullet here, which I think was your point, Graham. Scale means different things to different businesses. I think you just have to understand what you are and what you are building.
I'll let you close the floor, Stefanie.
Yeah. So I think I would just like to very much encourage founders to think big, to have bigger visions, like set yourself goals that are almost unachievable, because you're gonna get so much further. And I'm super excited for every founder that has an amazing idea and contributes, because this is what is going to continue to improve the way we live and change the world. And it's so needed. So stick with it, but set yourself huge goals, because I'm very certain that you will end up at a greater place than if you had smaller ones.
Well, Stefanie, thank you so much for joining us today. And we thank all our listeners and the audience. We hope that you found today valuable. And remember, our next webinar will be towards the end of May. Please remember that our webinars are available on YouTube. Feel free to share them with your friends and colleagues. And thanks again for joining us today. And Stefanie, thank you from dialing in all the way from Germany.
It was a great pleasure to be on the call. Thank you.
Thank you, guys. Bye-bye.